Vikash Kumar Jain is now with us, India strategist at CLSA. Vikash, good morning. Good to have you with us here. Thank you for joining us. Was looking forward to speaking to you at 9:15, but 9:50 is close enough. How are things, Vikash? Talk to us a little bit about... Actually, let me pull on what we were discussing with the management of REC earlier. We were talking about populism making a bit of a comeback, right? If you take a look at the last 10 state elections across the board, all of them pretty much have seen schemes one way or the other. Most of them have been directed towards women, but there is also free power, free gas, and many other things. And once you roll these out, it's very difficult to take it back. It only expands. You can't stop it, right? Now, we are again entering into an election season with the big election, which is in Maharashtra about a month and a half ago, from now. Is it a factor, or do you think, as some have said, well, if general elections was barely a speed bump, why should these matter? Or do you think, it does matter? Are you hearing anything from investors on this? Go on.
So I think, firstly, thanks for having me. The context is what is relevant, because if you look at what we've had year to date to a large part, starting December, that was incidentally after the state election results, those state election results, we've had a very powerful rally on certain kinds of stocks, which have been more investment-linked stocks. There was a lot of expectation that with a stronger mandate that Prime Minister Modi could get, the same set of stocks will get wings, Capex-linked stocks. The mandate was not as strong, number one. And interestingly, we did a report calling them Modi stocks, and how they've had a big party till election results. Interestingly, they have underperformed other stocks post-elections. So there's clearly a change in the fabric of this still a bull market. And that's something that needs to get recognized. There's context to it. I mean, these stocks had a median return of 55% median return over a 6-month period. So there was a lot of expectation baked into it. A lot of what you say in terms of populism, or at least not a very strong mandate, means that you need to get concerned, or you need to be a bit more cognizant of a stronger opposition, means that policy making will get a little bit less unequivocally focused on investments. Now, that, along with the context of that kind of re-rating, is what we need to be focused on, and that's where we tone down our focus. For example, we in our India portfolio that we've been running for about 3.5 years with reasonable amount of success. On the day of the election results, we let go of a key Capex Infra name, and we started focusing on elsewhere. So it'll become a much more normal market, is what our call has been. And that's something which I think in the second half of this fiscal will become even more relevant, to think about it as a much more normal market. Typically, election and big events like that have had this kind of a rally in anticipation, which at times gets pretty significant, and then a reality check. So I think that's something which we've seen many a times. This time, it comes in the form of this, all the things that you mentioned around state elections and populism and a host of other things. But the context makes it even more important. So I'm not saying that the multi-year infra theme is behind us, but clearly a lot of these stocks possibly will need to catch up on some breath after the very strong period that they have seen. So that's the context bit that we need to think through when thinking about it. So for nearly 3.5 years, we've had Capex and Infra as a big overweight in our portfolio that we've had it. We kind of trimmed that. I mean, so that's something which just tells us the way we've been thinking about it.
Because that's pretty interesting. So the next question is that if you're trimming from Capex and Infra, where are you recommending to add positions? What should be then higher up in the portfolio now?
So, this is a bit of benefit of hindsight and maybe our luck. We replaced that Capex and Infra name with going overweight on IT, and which has been the star sector. But now the question is, what happens from here on? I would say that as we talk of a more normal market, we need to start thinking of what's been happening globally. Trust me, India behaved like an island through this period from December to June to a large extent because we were far more focused on what happened to us domestically and the election, etc. And I think we get into very interesting times with the job report and the job revisions, etc., that we must have spoken about, and the Fed meet in September. Because even the most recent comments that have been coming out of our own central bank, they do not really want to think of rate cuts right now. And let's see what commentary comes out of Fed. And sometime we still believe that in the last quarter of this calendar year, the rate cut environment or hopes will rise in India as changes that are made by Fed. But more importantly, I think whether it's a 25 bips or a 50 bips is the flip that we talk about. And maybe tomorrow at Jackson Hole, we get a better sense of where it is likely to be. But I'll be more interested to hear after the rate cut, which is more or less a given in September from the Fed, what is the commentary like? If it's still dovish, then I don't know. I am not in the camp that I don't think RBI can stay away from it for such a long time. So I would say that that whole rate cut environment coming up, or before that, a period where we are sandwiched from no rate cuts to rate cuts, there will be a period where there's going to be that confusion where RBI kind of cut rates immediately or not, or there's still a lot of delay. I think that's where new opportunities are likely to emerge. I would want to think of areas where rate cut excitement or where stocks are still okay and they are leveraged to rate cuts. That's where we need to start thinking about. I'm still not in that camp. We still have a pretty big overweight on banks. We still have an overweight on energy, and we still have an overweight on IT. Those are our favorite sector. But clearly, that's where we need to start thinking of, depending on what we hear from central banks.
Vikash, so talk about single stocks, stuff you've published, which is out there. I mean, if you can, where are these opportunities? Which are the top ideas for you now? Or you want to talk about? Yeah, go on.
See, we'll stay away from talking single stocks, as you would know. But you clearly have the stocks that CLSA likes, or the stocks which are in our portfolio. Those are things that you would definitely have from reports that you might see. So, but there are still a section of rate sensitives where things have not. Valuations are palatable. Now, there are some large cap NBFC names where valuations are palatable. There are some of these others which could get interesting. I'm not saying that they are interesting immediately, but if the rate environment kind of changes, those are things which could get interesting.
Sensitive is one. What about oil, which has come off sharply? I'm talking about international oil prices. You, of course, also track the oil and gas space in that entire sort of spectrum of stocks. But do you like OMCs? Do you have a view?
So, oil is a space where we have had a clear preference for upstream over downstream. Over the last few weeks, it's not really worked like that in terms of downstream. I mean, as in downstream has also got excited. But I would believe that somewhere around that $70 to $90 range is the happy range for oil for OPEC. We are towards the bottom end of that range. I would not really want to play in a lot of big correction from where we are here. There could be a little bit more, and there could be that settling down, because the event for oil that we are looking at is in October. Does OPEC start, kind of bringing back some of the production cut like they had thought about? I think they are very reactive to prices. With this kind of prices, there's a reasonable chance that OPEC delays that production increase that it has talked about. I think that might lend support to prices. So closer to 70, 75 for Brent is where I think the floor is. So I think a large part of that corrective trade has played out is the camp that I am in.
Since we talk about oil and gas, and we'll talk more about this name I'm talking about, RIL, in just a bit with another veteran analyst, in a couple of minutes. But Vikash, our Reliance annual AGM next week, Thursday. Are you is it a discussion point with investors? What should we expect? Is it going to be a big one with a major announcement? Usually there is.
Again, I'd stay away from We keep writing about the name, and you can pick those, our opinions from there. I'll stay away
Got
from discussing individual stocks.
Okay. All right, Vikash. We'll leave it on that note. Thank you very much for joining in. Good having you on and getting our perspective on the market.